This is a review for the past week's trading in the June Euro contract. Throughout this past week, I've had a ceiling resistance here at 33.75, and every time that the market was able to get up to that level, we were very aggressively buying buying puts. And on several occasions, as it came up here, we were buying puts with the idea is that as long as prices stayed underneath of this resistance area, that we'd be buying these puts, that we were bearish on this market. Now that would change if we were to see prices move above the market and then retrace back to it with a formation that in something like this would change our view. We never saw this up here, and so continuously buying puts, establishing positions for the short move to the downside. And when we would achieve our support levels on the smaller time frame, we would take profits on those puts and we would roll them out to the 32 evens. And we did this continuously. And here, yesterday, market just completely fell out of bed. Gee whiz, over 150, 180 points or so. And we were very well served to come down to our support level that we've been talking about, the 32 even area, and it looks like it's going to push forward through there a little bit as well. Now, typically, we would be rolling puts out here at this point, and I would like to just close out the puts. We've got a short holiday week this week. There are going to be a few days where there's not going to be any market action coupled with the weekend. So this is a good time to, we've done very well with every option position that we've taken here was profitable. This is a real good time to just go ahead and take those profits. This was a beautiful move to the downside, like I said, nearly 170, 180 points on the future side. And so, you know, participating in the futures, we see that at these levels, we see these long tails. And that's very volatile action considering that this is a 60-minute bar chart. And that's the problem, and that's the difficulty with trading the futures, is that there's so much risk involved. Whereas with the options, when we establish option positions that are financed by the market, it's easier to withstand this kind of action at these areas. And we often see them very, very often. In fact, it's very revealing that when we see these long tails, some of it's stop running. Some of it's just market telling us that it's not able to sustain these levels, and they fall back. So, excellent week on the euro. And, you know, oftentimes, you know, we'll get questions to the website, you know, can I try you for a certain period of time? I really want to see if you're this market wizard. Well, we're not. What I do is I develop these levels that represents a framework for what we're going to do and how we're going to place our trades. And then we position ourselves on both sides. And in this particular case, when we were near the high of resistance, we were looking more towards the short side. Like I said, unless and until this area was taken out to the upside, we would be positioning ourselves with puts. And when we had these little intermediate support areas, we would be rolling positions out, such that if the market did fall out like it did here, we would be well served. If it did not, then it wouldn't cost us anything. And that's how I've been able to hedge off some of the risk that's associated with trading the euro. And this is a perfect example of where we were served very, very well. These puts just exploded to the upside, captured those profits, and it worked out very well. So, you know, the good thing about this is that we didn't know this market action was going to happen. We had the framework in place, but there are so many factors involved other than technical as to how these markets are going to run. What we do and what we teach in our room is a way in which we can position ourselves in such a way that when it does run in one direction or another, that we'll be in the market. So the website is tradingeurofutures.com. It talks about, there are some videos in here that explain some of the methodology and some of the ideas about using options to offset the risk with the futures. You can subscribe to our service. We've tried to make this to where it does not involve a huge investment of coursework and this kind of thing. You just jump right in, and on a daily basis you get an update and more updates throughout the week and throughout the day as things develop. And really over time, I think you'll get an education as to how you can position yourselves in a market that's very hard to predict. And with our work, our objective has always been not to be in the prediction business. We're in the position of placing trades in the market that are financed by the market so that when it runs, we're in it. And that's the bottom line. It's not about being correct. It's not about foretelling the future. It's not about being a wizard. It's about being in the market. And we establish our positions that are financed by the market on the shorter term to ride these long and huge pivot moves.